Hey, welcome to the Guaranteed Retirement Guy Show. Thanks for tuning in. Today I'm going to be answering the question, why are so many retirees buying annuities? Okay, what's the deal? Are they good? Are they bad? Are they a scam? Well, I'm going to show you why there's so many people buying these right now. So if you're thinking about purchasing an annuity and you're like, I'm not sure if this is for me, then I would invite you to go to my website and check out the annuities and what they're paying out right now. And then you can kind of decide, you can research them yourself. And then at that point, if you're looking to purchase, I'd love to help you. There is a link below this video. You can go to my calendar, or you can go book a call with me right on my website, and it'll put you right into a Zoom call with me. So it'll send you a link, and I'll send you some reminders on that as well. But let's talk about why so many people are buying these. Okay, it's just because rates are so high right now, and we have so many people turning 65 every single day. So it is at its peak levels right now. And people right now, even though they've enjoyed the stock market returns, they are also looking for protection. And a lot of times as we get older, we're just not in our growth phase anymore. And we're like, all right, I need to protect some of this money that I've gotten. You know, I don't have 20 years to recover from a recession or from a huge drop, right? I'm looking for some protection and also for some guarantees. And so that's why a lot of people are looking at annuities. And I'm going to show you the payouts. You can go to my website, johnstevenson.com, and check for yourself, and you'll see why. But I'm going to show you some payouts right now and kind of some of the strategies people are using right now to use annuities in their retirement. All right, so looking at my screen, I'm showing you first the MYGAs. These are fixed contracts, fixed annuities. Okay, they give you a fixed rate. They're very similar to CDs. They're called multi-year guaranteed annuities. That's what MYGA stands for. And multi-year is just you can choose from 2 to 10 years and sometimes longer. And of course, it is a guaranteed annuity, which means it pays a certain amount that's guaranteed every single year. Okay, and these are also credited to your account each day. So pretty nice. All right, so let's take a look at some of these. You'll notice that the 2-year is paying like 5%. It's not bad for a 2-year because a few years ago they were like 1. Okay, 1, maybe 2% if you're lucky. Then you have the 3 years, and if you're looking at MYGAs, I just recommend do the 5. Do at least a 5-year. Do a 5-year, do a 7, or do a 10. Okay. If you're going to do such a short amount of time, I would just throw it into a high yield savings account or a money market. I mean, yeah, they don't make as much, but they're more liquid, and it's just usually makes more sense if you just want to be able to have access to your money quicker. So, but that's up to you. But I would just say do a 5, 10, or 7 because you usually get better rates. So you'll notice these are like 5. Let's see. Well, this one 5.5. That's not too bad for a 3-year. All right, but a 5-year is 5.8. You see, so it's definitely better. So 5.8 with Exonic, that's not bad. If you go up to 6-year, it's 5.4, 7-year, 5.5. See, it's a little bit better for the 7-year. 8-year, 5.3, 9-year, 5.3. You see, they're just the sweet spot really is the 5, 7, and 10-year. And here's the 10 years. The highest is 5.5. So let's take a look at that. Let's see what this would actually look like. And we're looking at someone with 500 grand. Okay, you might have less. And if you have less, like some of these have low, mid, and high bands, which means if you put a less than 100,000 in, you might not get the rate that you're seeing online, okay? Because they do have certain minimums to get those rates. So keep that in mind. All right, so if we're looking at this, we will say, let's just go to Illustrator here, and we'll say what the growth rate is. Pretty good. Really good. So $27,000 in the first year. Okay, if you want to strip off the earnings, I suppose you could. You could do that and just live off that and get your $500,000 back. Or let that thing compound. Okay, you might just park the cash there. And if you park it there, you're going to have $854,000 guaranteed as an ending balance. Okay. If this is an IRA or if it's coming from your 401k, it'll go into an IRA account holding this annuity contract at the carrier. Okay. Once you're done with it at the end of the term, whether, whatever it is, let's say a 5-year term, at the end of 5 years, you're going to have 30 days to take your money out. Okay. Otherwise, it will roll back into a lower rate. Okay. So you have to remember to do that. Also, if you want to roll it back into your other IRA, wherever it is, Fidelity, Charles Schwab, you can. Okay, it's very easy to do it because it's in an IRA already. You just roll it back into Fidelity or Charles Schwab and buy some more stock or buy some money market or whatever you want to do there. So as long as you keep going, rolling back and forth between those accounts, you'll be fine. You're not going to be paying taxes. The only time you pay taxes, of course, is when you take the money out. And even if it is non-qualified money, if you're putting non-qualified money in here, it's going to be taxed on the earnings first because it's taxed on a LIFO. Last in, first out. So that just means if you put 500 grand in and you put you got $854,000 in here, and you pull out the whole amount, they're going to tax you on the $354,000 that you earned. Okay, if you take out $100,000, they're going to tax you on the $100,000. So you're not going to be able to say, well, I want to take out my $500,000 that I put in, and I'll leave the earnings in there to compound. Wouldn't that be great? No, you can't do that. Okay, the IRS wants their money, and if they're going to give you the opportunity of tax deferred growth, then when you do actually take it out, they want to be paid first. So that's how that works. Even with non-qualified money, it is a nice perk to be able to have your money tax deferred. I mean, you don't get that with a CD, but you just have to remember you are taxed when you take it out. So, all right. So let's look at the other reasons retirees are buying annuities. Well, the biggest reason I would say is for lifetime income. And I'm going to show you the income rider. You can go to my website and check out the SPIAs and DIAs. Sometimes they pay more, but most of the time in my experience, the income rider outperforms everything. And it gives you the most flexibility. With a SPIA or a DIA, you got to pick the date and you can't change it. It's irrevocable. You cannot get your money back. With an income rider, it's the complete opposite. You don't have to choose a date. You never choose the date when you start it unless you do an immediate. But most people want to defer them and they're not sure when they want to take income. And so you're not choosing the date. You can take income whenever you want to. And the longer you let it grow, the more you're going to take. If you want to cancel it, you can get your cash back. There are surrender charges. That is, I'll show you that. But still, at least you can cancel it and get your money out. Okay. So if we look at this, we'll say, all right, $500,000. I want to take income in 5 years. Not saying you wait this long. And not saying that you're a joint payout, but just in this scenario, we're going to assume, okay? If we look at this, then it's $47.76 per month, guaranteed. Okay, there are other payouts that sometimes will pay higher than this, but it's only for like 5 or 6 years, and then it reduces thereafter, and it reduces a lot, like 30%. So if you're wanting highest payouts that never reduce, I would choose these. So you can see Nationwide is the highest right now, and if we look at that, we'll be able to see the income is $57,000 a year, guaranteed for the rest of your life and your spouse's life. Okay. And if you live till 95, you're taking out $1.4 million. And if your spouse lives longer or whoever lives longer, it will continue to pay out until the very last breath of both of you. Okay. That's how it works. So it's very nice. It gives you that longevity rest. It gives you that peace of mind knowing that income is always going to be there. So when the market is down in the dumps, you're not stressed out. Okay. You can keep paying your bills. You can keep traveling, keep doing the things you want to do because you set this up for yourself. Okay. People do this all the time. Okay. You've got retirees right now. I'll just say right now, we're almost to 500 billion in cells. Okay. That was like 200 billion just several, 4 or 5 years ago. Okay. That's a big difference. And so that question people ask is, why are so many people buying? Well, there's a couple of reasons. As you know, lots of people are retiring. Lots of people are turning 65. I think earlier this year, the peak levels hit like 11,000 people per day. Okay. And I think it's going to go down a little bit. Okay. But even 10 years from now, I don't think it's down that much. I think it's down to like 10,000 people a day or a little bit less than that. So it's still, there's a lot of people turning 65. And there's a lot of people who don't want to be in the stock market. They want to have the growth. Yes, but they want income. And I guess you just have to ask yourself, how long do you want growth for in your life? Are you just going to be in growth mode forever until you die and then just pass your money on? Is your money for someone else? Then great, keep doing that. But most people, if they've been saving, they want to enjoy the money themselves. Okay, well, enjoy it. And one of the best ways, in my opinion, to do that is through an annuity contract, especially if you're looking for income. So that's totally up to you, but that's my plug for that. So again, if you want to book a call, you like to look at buying an annuity for yourself, there's a link below this video and there is a link on my website, johnstevenson.com. So check out the annuity payouts yourself and then you can decide whether or not it's for you. All right, so now I'm going to go back and say, well, I'm a single male, okay? I want as much income as possible. I don't want a joint payout. Or maybe I am married, but my wife is like 15 years younger, okay? Well, that's going to be a much lower payout. So you might want to buy a separate contract for both of you. Okay. Or sometimes people will do a single payout and then they'll have a huge life insurance policy. That can be good too. So looking at this, it goes up. Yeah, quite a bit. So now we're at like pretty much $5,000 a month. And so that's for a single payout. So you look at that and say, well, that's pretty good. I've got longevity. I feel good. And I want income that never goes down. Great. It's a nice payout. Okay. And it's just something you can count on. You can turn it on. If you want to travel, you want to go to the cabin in the woods for 5 months, you want to go to Italy, wherever. Okay. The money drops in your account like clockwork and you can do whatever you want. You can focus on what you want. And it's hard to put a price tag on that value. Okay. You could say, oh, I could put 500 grand in the stock market and I'll earn a lot more. You are right. You will earn a lot more. You absolutely will. Unless we have a horrible crash and it lasts forever. But that's probably not going to happen. Okay. So, but it gets to a point where we're like, okay, well, when do I want to enjoy my money? Do I want to use it at some point? Or I'm just going to leave it in there and let someone else enjoy it, even though I've been, saving and scrimping for myself, for my family. And I'm talking about this because a lot of people will meet with me and they just care so much about legacy and they care so much about leaving money behind for their kids. And I don't blame them. There's nothing wrong with that. You always want to help them and give them a step up, but you have to think about yourself first. Okay. And I don't know that sounds selfish, but it's not. Okay. If you think about yourself first and you take care of yourself first, then your kids don't have to take care of you. Other people that you love don't have to take care of you. Okay. You're serving them well by making sure that your needs are met first. And don't just meet your needs, meet your wants. Okay. Because you're going to have other wants that will feel like needs later on, especially if you have higher health expenses or a doctor you want to see that's maybe not covered by your health plan. Okay, there's a lot of reasons to have more income coming in than what you need currently because you may need it for something else that is much more important to you later on that maybe you're not thinking about right now. Okay, so you have to really plan. Okay, when you're thinking about income and you're wondering, why are so many people buying this? Dave Ramsey and Susie Orman and all these people say it's so horrible. Well, they're all about growth. They're all about mutual funds. And I love mutual funds too. But guess what? That's for growth. It's not for market protection. And it's certainly not for guaranteed lifetime income. Okay. For my lifetime income, I want an annuity contract providing that. I'm not buying that and comparing it and say, well, it's not earning me as much over here. And here's the internal rate of return here compared to here. It's like, stop. So many people get so hung up about that. If you want income, if you want contractual guarantees, you should buy an annuity. Okay. If you don't want that and you just are hung up on growth, then don't think about annuities. Buy stock, buy mutual funds. I've got Tesla. It's been a great ride, except when it's not. I've had it go down pretty hard. You've seen it go down. That's not fun. Okay. But it's a lot easier. I'm younger. But guess what? If I was 65 or 70, I'd probably not be very happy about it. Unless I had these annuity contracts over here paying me and my wife income, then I'd be like, okay, well, the market's down. I don't like my account going down like this, but you know what? We can still go on this cruise. We can still go see our grandkids. We do whatever we want. And so our lifestyle is not hindered, and my account, I can still let this grow. It makes you a better investor, in my opinion. So you be the judge, but I'm here to help. If you are looking to purchase an annuity, I'd love to help you. So I'm a certified financial fiduciary, which means I have to show you everything that's available. Okay. So if the highest paying annuity happens to be the lowest commission, I still have to show it to you. And that's why I tell people go to my website first so you can see for yourself before talking to me. So you don't feel like you're going to be like, well, he's going to show me whatever he wants. No, it's going to be whatever you're seeing on the site. Okay. So I'll show you, I'll answer your questions. And of course, if you're looking to purchase and set up these contractual guarantees, then I can help you do that as well. So anyways, hope you enjoyed the video. If you do, like, subscribe, share, and I'd love to help you buy an annuity if that's what you're looking for. And if you have any questions, comment below. I'd love to help you there as well. So thanks again for watching, and we'll see you next time.